gentleman from Rhode Island for 5 minutes.
Well, thank you, Chairman and Ranking Member. Thank you for letting me join you today. I asked to join the Oversight Committee today because of my background as a state treasurer for 8 years, where I was a colleague of Treasurer Frericks, and my experience as an investor in the private sector before that. And the message that I want to deliver, because people need to understand it, is that these attacks against ESG investing are based on a fallacy. They are based on the argument that somehow incorporating environmental and social and governance factors is a breach of fiduciary duty to clients or to beneficiaries. That is not true. The opposite is the case. As fiduciaries, we would not be doing our jobs if we did not consider environmental and social and governance risks when making investment decisions. And in fact, investors in companies that have failed to incorporate ESG risks into their decision-making have lost a lot of money as a result. Do you want some examples? BP. After the Deepwater Horizon spill, BP stock dropped 55%, eliminating $88 billion of shareholder value because that company failed to adopt proactive safety protocols. Volkswagen, their emissions scandal caused their stock to drop nearly 30%, also costing investors billions of dollars. We've heard about Norfolk Southern and Purdue Pharma. The list goes on and on. Companies that do not manage their environmental risks, their labor risks, their consumer protection risks appropriately open up investors, including retail investors, pensioners, retirees, to financial losses. So investors would not be doing their jobs if they did not think about these issues when making investment decisions. And in fact, because we have a free market in this country, investors are voting with their feet. We've heard about how big companies like BlackRock and others that integrate ESG factors into their decision-making process control trillions of dollars. Yes, because investors have chosen to take their business there because they want their asset managers to be incorporating all of these factors into their decision-making process. And the data has borne out. Over the last 5 years, according to Morningstar, 2/3 of funds that emphasize ESG in their investment process have ranked in the top half of performance relative to their peers. That's mutual funds. So again, ESG investing, it is common sense, and it's been going on for years as well. Private investors have been doing this for decades. The Department of Labor has been allowing this for public funds for decades. The SEC has allowed proxy voting proposals on ESG issues for decades. What is new here is this trumped-up opposition, no doubt funded by and pushed by the oil and gas industry, that is desperately trying to hang on because they know that the smart capital is moving toward a clean energy future. Again, if you want an example, if you had invested $100 in ExxonMobil stock 5 years ago, that $100 would be worth $142 today. Pretty good. If you had invested that same $100 in First Solar, a publicly traded company, it would be worth $267 today. So the industries of the future are winning, and the industries of the past are now trying to rig the game by employing government interference to prevent investors from doing their jobs. And I would note, this government interference is being run oftentimes by people who have no investment experience themselves at all. The two Republican witnesses who are here, who may be very credentialed in other ways, between the two of them have 0 degrees in investments or economics or finance, are not CPAs, are not chartered financial
I ran a
analysts.
tech venture fund, just so you know, Congressman. So,
Yeah, fair
okay,
enough,
so
but no degrees, no
But just to be
CFA,
clear
no
on the
CPA.
record, I just wanted to
Reclaiming my time. All right, I've spent a career in this, as has Treasurer Frericks and many others who were not given the opportunity to come here today. Our Republican witnesses have experience trying to overturn elections that were freely and fairly won, but not incorporating smart ESG factors into investment decisions. So listen, we know what's going on here. This is a taxpayer-funded effort to run interference for the oil and gas industries, prevent investors from doing their jobs and exercising their judgment, and prevent investors from having the options for where to move their money. It's un-American, it's not in keeping with the free market or sound investment principles. And with that, I'm out of time, and I yield back.